Hello from Moted Markets. This is Ahura. Will be with you with the global economic outlook in the week ahead, which is going to be the last week of February. Uh, in as always, let's first check what we had first, and then we can see what we had in the previous week, and then we can check the week ahead and see what we can expect. Last week it was somehow busy, but on the other hand, it was not such a busy week on the economic calendar front. But on the geopolitical front, it was amazing. It was an amazing week. Uh, on the calendar front, what we had, it started with the Japanese GDP increased better than expectations. In the Japan quarter for last year's quarter for GDP increased by 2.8% annually and 0.7% on a quarterly base. At the same time, the inflation numbers on Japan, which published on Friday, showed that the national inflation increased to 3.2%, much higher than 3% and 3% in the previous month in December and 3.1% market expectations. That means with the better economic growth and higher inflation, the Japanese central bank is thinking right now about raising the rates at the first half of 2025. So we can expect, we can see that the central bank in Japan thinking about raising the rates at the first half of the year, not at the second half. Continuing with the Asia, the central bank in China held the rates for 1 year and 5 years loan prime rates, respectively at 3.1 and 3.6%, and it was widely expected. We know that the economic growth in China is facing some challenges, especially on the demand, on the domestic demands front. But generally, with the fiscal policies that we had, central bank, Chinese central bank had in previous months, things is a little bit changing. We saw that in the PMI numbers, especially with the manufacturing PMIs getting slightly stronger compared with the previous months. Continuing in Asia, Australian central bank cut the rates by 25 basis point, as it was widely expected. Australian central bank also, we can see the Australian economy also facing some issue and challenges. That's why they cut the rates from 4.35% to 4.1% by 25 by 25 basis point. We know the inflation is somehow to control the labor market, so getting slightly stronger. So the central bank is thinking about, but the economic growth is facing challenges. The central bank is thinking about raising the rates, cutting the rates to support this economy, this weakening economy, especially with the economic condition in China. The Australian central bank is thinking about more stimulus and more supportive programs. More than Australia, the New Zealand, they cut the rates by 50 basis points. We know the economic growth in New Zealand is facing too many challenges. That was the reason why the RBNs had cut the rates by 50 basis points, and even the signal about more cuts to come in the next meetings. Coming this way, in Europe, the most important data we had, it was the PMI numbers on Friday. Slightly improvement we saw in the European economy, but generally the economies in Europe still under pressure with the PMI, with the weakening slightly service PMI and improving slightly manufacturing PMIs, but the manufacturing PMIs, unlike this slightly improvement, they are still under 50 expansions area, which means that the economy is still under pressure in Eurozone. Continuing in UK, out of the Eurozone, but in Europe, British PMI numbers also repeated the same pattern with the other European countries, but the retail sales beat the expectations with 1.2% annual increase and 2.1% monthly increase after 0.9% fall in December. Generally shows that the people are ready to spend more money. We saw that in the labor market data as well. With British unemployment it was steady at 4.4%, but average income increased by 6%, including the bonuses. So which means that the labor market even thought it's not that stronger as it's supposed to be, but the more people, they are gaining more money with the people that you're working. they're gaining more money, and that's supported for actually the 4.4% unemployment rate is not a bad number. So the labor market is fine. So that's why we can say that okay, the people they are ready to spend more money. So even though that they're ready to spend more money, that's why the remittances increase. But that's why the inflation numbers also was surprising. On the annual one, while on the monthly scale, inflation fell by 0.1%. It was less than 0.3% expected fall, but at the same time, on the annual scale, inflation from 2.5% jumped to 3%. That's surprising number. Even though the PPI also increased, the producer price index also increased by 0.8%. That generally shows that the inflation still is hot in the UK. So the central bank policies should be more cautious. Cautionally, they're supposed to decide more cautionally the policymakers in UK central bank. Okay, and finally, in United States, the main market driver last week it was on the economic calendar it was the housing market data, but the housing market data and the PMI numbers they show while the housing market numbers was weak, the PMI numbers that was not surprising, but the labor market with the initial jobless claims at 219K was even thought it was less than 200, weaker than 215K expectations, higher than these numbers initial claims. But still, the 219K showed the weak, somehow the positive economic growth. But the positive labor market, sorry, somehow the positive labor market. But at the same time, the U.S. labor market with these numbers, also we had UK, United States, we had the Fed meeting minutes as well, which showed the central bank's policymakers in the United States, they are thinking about the holding the rates for longer at these levels, and they are not in hurry to cut the rates. So all these news, they were negative for the stock markets, with the negative expectations, with the generally, especially on the earnings front. Walmart had earnings report, and we even thought that they gained more. I mean, they paid more EPS, and they had more income over revenue. But generally, their outlook it was not impressive. So they showed that the people, despite the better economic condition, they have a doubt about the future improvements. That was the reason why after the market got surprised and got supported by peace talk between the Russia and United States, with the good news about the peace talk, which is going to be a sign between the negotiation between the Russia and Ukraine. Actually, we can say between the Russia and United States on Ukraine. It was better to say in this way. The market got supported by this news, and stock markets improved, but with the weakening economic data and not impressive number, and with the concerns about the future developments, the stock market closed lower at the end. We'll check the charts, but before checking the charts, let's see the next week's data. Next week, the main numbers of the next week will be about the inflation and GDP. For example, in the Eurozone, we are waiting to see the inflation to be steady at 2.7% to falling 0.3% on the monthly scale, and the annual scale core CPI at 2.7% and headline CPI at 2.5% steady. But the GDP numbers, especially from the Germany, should be more considered. We have the GDP numbers and inflation numbers from some other developing economies as well. But from China, for example, on Friday from Japan, we have the Tokyo inflation numbers, which is expected to be steady at around 2.5%. But the main or the most important data of GDP should be the United States GDP numbers, which is going to be published on Thursday, the GDP numbers, and we expect to see the UK, Thursday, the United States GDP on the fourth quarter 2024 to increase by 2.3%, slightly less than 3.1% in the third quarter, but on a quarterly base, It's supposed to increase by 2.2%, much higher than 1.9% in the third quarter. So which means that the economy is still strong. And the next day we will see also we will have the PC price index for the fourth quarter as well, which is also expected to show the higher personal income and personal income inflation for the fourth quarter. But the market will be mostly focusing on Friday's PC price index and core PC price index, which both of them expected to increase by 0.3% almost on the monthly scale. So maybe the core PC price index increased by 0.2%, but PC price index, the headline, is supposed to increase by 0.3% on the monthly scale, which means that on the annual scale, 2.8% core PC price index will be repeated and 2.6% for headline PC price index. If that happened, it means they're repeating the same numbers with the positive GDP, while net income the personal income supposed to increase by 0.6%, and spending by 0.1% generally shows that the income is getting higher, the people that are getting more income, while the inflation is not falling so fast and the GDP is fine. And all these data will support the idea of higher for longer United States and can support the US dollar and put the pressure on the stock markets. But they cannot support the US dollar too much. We will talk about that on the chart. We will have the GDP numbers and labor market data from other economies as well. But the most important numbers that's supposed to be that should be watched closely is this. On the political front, also with the election of the Sunday election in Germany, now we have to wait and see what's going to happen. Who is going to make the government? Will the parties will agree together, and how long it's going to take to have the governments in Germany? If it takes longer, which means we put more pressure for Europe. But if they agree faster and earlier, so we can say that it's going to be the positive news for the Euro. But generally, the condition is not so good and impressive for Eurozone. Let's check the charts and see what we can expect with these data, what we can expect from the charts. Starting with the US dollar index. US dollar index still is, from technical point of view, under 106.60 is negative, and we can say that the next stop can be around 105.50. Especially if the P stock go forward, especially if we have a more good news from the P stock. While the case fire between not the case fire, we can say somehow the case fire between the Israel and Hamas. So it's continuing. They're exchanging the hostages. If they continue as well the same way that the positive way that it was going on last days, if it continue at the same speed, while we have the peace talk going on between the Russia and United States, all the condition they are positive, which is negative for US dollar. Can put the pressure on US dollar, but not too much, because still there are the concerns to be stayed. So that's why strong US dollar, but lower than this level between 105.50 and 106.60 is expected. On the gold front, these numbers, these conditions generally, they cannot be supportive for the gold, but from the technical point of view, still it's a positive. Any downtrend or even changes could be seen under 2,895. If the price fell under 2,895, then we can say that for the short term, the trend can change. But generally, right now, we are positive still for the gold, and the market still. The Goldman Sachs put the $3,100 as its goal for 2025, which means that we are already near. We have almost $200 more to go. So it's about 10 months. So that's why we are not expecting to see much. We are positive about the gold, but we are not expecting to see such a big with such a higher speed to improvement. On the energy front, with these peace talks going on, with the weaker economic data that I mentioned from the Europe and the United States, that we had, generally these news, they are not in line, they are not in favor of the energy market. So the energy, even though the energy market, we had a news about the colder winter in many countries and more demand for gas, but still with the more production in the United States and more production in other countries. So we can say that oil is not a positive, even though it's not so much negative. The condition is not a positive for energy and oil market, and technically we can say that the lower high and lower low is signing is are the signs of slightly downtrend for now. So if the $69 for WTI is pushed, we can it can open the door for lower digits, but generally 66, 67, $60, those numbers, if it falls further, that can be those levels not lower. The condition for the stock markets, as mentioned earlier, is not such an impressive condition, especially if S&P 500 fell under 6,000 US dollar, it can go further. Generally, the condition for the stock market with the higher for longer expectation and with the geopolitical tensions going on, even though we have a good news, but still they are not, they couldn't be that much supportive to change the market. Technically, if S&P 500 rose above 6,100, that they can continue this gain, but falling under 6,000 can change the market condition totally and put the index on the downtrend. Same condition we have for the Nasdaq and the Dow Jones, no matter. On the cryptocurrency market, even these numbers, they are not the positive for the cryptocurrency market. They are not the negative as well. Mostly the market participants, they are waiting for regulatory news to see what these Trump administration have for them. So for now, the market is uncertain for the cryptocurrency, especially for the Bitcoin. As long as it's trading between 94,000 and 101,000, there is no direction. Any new direction should be created under or higher these levels. Yeah, that was the market conditioning and market expectation for the week ahead. If you had any other question, please don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.